But I think the one thing which can make or break any business is comms, it's PR, it's promotion. That actually you can have an average product that is promoted well, do very well, and you can have an exceptional product which has poor comms, poor messaging, poor graphics, poor brand, and it tanks. And it's one of those things that I don't think is taught enough or accepted widely enough of how important it is, that as a lot of the engineering firms that I have worked with and still work with now, marketing is almost, or was almost, deemed as brochures, the odd trade stand, and just fairly low level social stuff, when actually the more you understand about the customer and the vision, and even before we came live on air, you would ask about the headlines and stuff, a solid grasp of that. Do you think that's really made a real difference to your business career because you know it inside out?
I think an even dirtier word in the world is sales. But if you can't sell anything, you can't get the tills ringing, if you can't get the money through the door, then your product, your business isn't going to thrive. And awareness is a key part of that. And, living the awareness and understanding the dynamics of that has been central to my growth as a business person and the businesses I've backed and been able to work with. And so, yes, there's marketing, but it's like here, I'm constantly selling the site, Hoult's Yard, as a space and as an idea, because there's something about brand, yes, and I've got an intrinsic understanding of that, but it's also awareness.
Yeah. So that particular business, and I'm going to from memory here, you grew from virtually nothing to 400 people. Is that right?
Opencast software.
That's
my marketing. So yes. Back in 2004 to 2008, I had a marketing agency which was called Wilson Harvey, and we'd grown to about 30 people, and we merged with another agency called Lowy, and Raymond Lowy had founded that business quite a number of years ago in the US, but it had ended up being owned and run in London. And we merged with that business because it has a sort of exciting brand to conjure with, in the same way that Vodafone created a brand for mobile phones and then went and bought other businesses around Europe and cobbled them together in a master brand. And that was our strategy with Lowy, was that we get venture funding, buy and build and grow the business. So we, from 60 people over 4 years with 20 something million pounds of venture capital, we grew a business with 400 people.
Wow. Because what I was fascinated by is that I'm in the middle of I'm at the start of my current growth journey now. But what I'm really fascinated by is that at a certain point you plan for an exit and you eventually exit. How quickly did you get the hunger to do something else? Did you take 6 months off, sit on the beach, or were you instantly already starting to think about different properties or different ideas and different things?
So along the way in the sort of merger and acquisition journey for me, I did actually, before this, I bought a publishing business. It was like 200, maybe 100 grand or something like that. I bought from some founders, and it had they were technology newsletters. The principal one was called Financial IT. There was another one called Insurance Technology Report. And we set up a business called Call Centers in Finance, another newsletter. And that I got offers to buy that business for a bigger financial publishers. And I ultimately sold that business for like 600, 700 grand. So we built the profits over like 5 years, and they paid 5 times the profits to get to 600 grand. So whatever that's 125 grand profit stream that we had in that business. But what I learned was that they were, this is the arbitrage, the difference between our small business with a 5 times multiple and their bigger business, which was quoted on the stock exchange at 18 times multiple. And the arbitrage, the difference in those was, so they paid us 5 times the earnings. Let's, for the maths say it's £100,000. They paid me 500,000, and they lumped those profits into their group on the stock market at 18 times, and the value to them was 1.8 million.
Yeah.
So they paid me 500 grand, which I was delighted with, but they then increased the value of their company by a further 1.3 million to get to 1.8 million. And I was thinking, brilliant, giant Ponzi scheme. Now I understand. Let's do some of that. And so I was interested in buying marketing agencies. This is on the pure financial engineering aspect, which is kind of where the PE venture capital guys are. But I was interested in how you could glue together a business through acquisition. And we pitched, understanding enough about that, to venture people. First, I was backed by a guy who I'd met along the way called Luke Johnson, who was chair of Channel 4. He's like if he'd been doing a little bit less, he would be the sort of classic dragon. And the Dragon's Den was started a bit later on, but he was like a dragon for me, an angel investor who taught me stuff, pushed me along. And then we grew with some international investors who wanted to get into the UK market, and then two US venture firms who put in the 20 million. And we then bought like 15 different businesses, very small to start with, and then integrated them. And there was some of the learning was, how do you integrate smaller businesses?
Because one of the things that I love about this, and I'm really enjoying this, is that you'll know yourself, you have a lot of people out there that talk the talk, but they haven't actually been there and done it. They've just read Rich Dad, Poor Dad, and they want to be a consultant and coach. But I love the fact that you've been there, done it multiple times. You've had the scars, you've seen it fail, you've seen it work. And it's that people will genuinely love to hear and experience this, because it's not everyone has, and it's really kind of fascinating to hear. And then I'm conscious, and you can cherry pick the ones that we talk about, but just some of your kind of titles and things you're involved with. You've got chair of Dynamo Northeast. You are co-chair of Opencast Software, and they're definitely going to talk about Opencast. You've got the MD of High Hubs, because you also have multiple properties. It's not just Hoult Yard. Do you still have the one in the city centre?
Yes. Haymarket, Haylofts, yeah.
But again, there's a lot of people are interested in property. A lot of people that likewise, people. I don't know. You can tell me how much time you've got, and we can cut it short.
I've got plenty of time.
But the point is, there's so much value there that people, I think, would love to hear about. Can we start with Dynamo Northeast? About what is it and what do they do?
So I moved back to the north. So to finish the kind of Lowy journey, I built this business, plugged it all together. It was extremely challenging we bought a third. So say there was a business with £1 million profits, and latterly we were buying businesses of that scale, maybe 3 or 4 of them. And if they had £1 million profits, there was 6 times multiple on that. So the owners were due £6 million. We would give them £2 million in cash up front, £2 million in shares in the bigger group, and then an earn-out plan over a number of years, like say 2 or 3 years, where if they hit their profit target, they got the next 2 million. If they exceeded it, then it ratcheted up even more, so they could make even more than the 6 million, because into the group, that was great. Unfortunately, with the credit crunch, some of the first things that when there's a squeeze and a recession, people stop doing is marketing as a lead indicator into recession. People are going, oh, we'll just keep that brochure or that website or the creative for that ad campaign for another 6 months, a year, and just bash it out rather than reinvent and spend money. So our profits in Lowy Group went down from 6 million to 4 million, but we had like 24 million of debt. So that was a strain. I actually got fired, relieved of duties by the chairman who I had hired and the board, because I think as one of the distractions in a kind of quite a panicky recession, people were like bailing out. And it was a savior to me after the fact, because I was relieved of the duties of having to turn around a business where the predominant background was people aren't going to spend on marketing. So it would have been extremely stressful to kind of try and turn it around and squeeze things together. But also we had these maybe 20 odd quite high owning
Yes.
partners who are also, it was a bit like running the European Union,
Got you.
because there were these countries, these different companies, and 2 or 3 people in each of those who were wanting a success. And some of the challenges are, like Germany versus Greece. One country, one company was very strong and even trading well in a recession. So they're going, give me more, I want to see growth. But they were connected with a company, unfairly calling it Greece for this example, which wasn't doing well and was trying hard. And, when the chips are down, does everyone pull together, or do people go, I'll look after number one, I want this? And while I, felt for a long time I had kind of unfinished business, at the same time, I'm like, move
it's
on.
a tough gig. Yeah.
It ain't going to happen. So, what am I going to do next? And I stewed in my own thoughts for a couple of years. And I ultimately never wanted to work for somebody else. I had a very interesting time sort of, saying I was 40, just nearly 40. Am I going to do something, left field, go and run a bed and breakfast in Zanzibar, lifestyle, all of that. And I ended up coming back to kind of what I knew, which was the tech sector and marketing. And also I kind of my sort of modus operandi, which is finding people in sectors which I really like, who I really rate, who have typically worked for other people, but not set up their own business. And there's a company in Cambridge I met along the way called IQ Capital, and they have IQ Angels. And so I see myself as an IQ angel. I've got some, ideas, experience, intellectual property, and a small amount of money, because I cleared a bit of money, but not, zillions. And that was enough of a runway to help a couple of businesses. And so I set up a recruitment business with a friend of mine who said, if I'm going to do this, I'll bring my 2 peer colleagues in. So B. Kayla, Jill Arnold, and Rachel Murray, that we're 25% each in a business called Future Heads Recruitment, which is in London. And that was where I sort of provided the plumbing, the entrepreneurial vision, the accounting, the lease, working on leases, the invoice discount, factoring services to help pay the cash flow and build that up. So I was like all of those kind of basic building blocks, and they were the superheroes out there doing the recruitment stuff. And that business is now 15 million turnover with about 50 people.
But I think what's really fascinating, and I don't know if people will kind of pick up on this, but a really good entrepreneur or business group finds skill sets and backgrounds that mesh together, that probably from your upbringing, you understood leases and, different agreements, and it all then has built on your career over time to really, it's like the jigsaw pieces that fit perfectly together. That actually experience, there's nothing better than actually lived experience on different things. And even when in a former role, I was head of marketing and strategy for a company called Techmar that floated on the stock market in the Northeast. And our plan and the strategy was exactly the same about how do you find complementary offerings that fit within the same supply chain that help you achieve something much greater than a whole. And it's really fascinating to go through that journey, because in some ways it's just a giant puzzle, and you have to see the value that maybe somebody else doesn't see to really kind of bring these together.